In this video, we're going to talk about how we can use price action rules to help us navigate the market and identify high probability setups. So today's session started with pretty much neutral bias. We have one bullish leg working higher, break, second bullish leg working higher, indicating to us that the uptrend played out, 2 legs up, and break a new high. Now you can see I'm marking the key levels, the low of the day support, high of the important key level resistance, because if this is going to be trading range, I want to understand where potential extremes of a trading range are. So understand where market may pivot and what is the price target. Right now I can see market correcting over a series of lower highs and low lows, so I'm going to redraw a brand new downtrend. However, I have break of the trend channel line indicating overshoot, so we have a little bit of an oversold area which can generate stronger push in the opposite direction. So I'm just going to follow, price action is going to follow these candles, small break in new high, market reversed to the downside. I'm going to redraw brand new downtrend. I have a break push to a new extreme of this downtrend, and this is what I do as a price action trader. When there is no big trending market as of right now, I just follow the short-term trends. They're going to help me navigate the structure accurately, and they're going to help me to stay on the right side of the market. As you can see, downtrend play with the break push to a new extreme, but I can see continuous series of lower highs and low lows like this. So because market keeps trending lower, I need to right now explain why prices continue to go lower. Okay, and what I like doing is I like using market geometry, and I like drawing some spike in a channel like this, secondary pattern, because you spike down, this is the first leg, spike down, secondary channel pattern. So as of right now, the structure is slightly bearish. I'm not really thinking about buying just yet. I'm mainly thinking about selling because this downtrend needs to get new extreme. And because this downtrend needs to get new extreme, what I'm thinking about is a second entry short, because I have a lowest low, first them to sell, pull back. I would like to see second entry short to test the new low. And you can see we have small consolidation, something like this. Okay, uptrend played out with the break, push to new extreme. So a break, push to new high. You can tell it visually resembles two-legged pullback, one leg up, break, second leg up. And this right here is a second entry short. The reason why I like this second entry short, because I'm not only selling that I expect new low for this downtrend, but I'm also selling triple test at the top of this consolidation, which means I'm using the range rules. You want to sell high. Now the initial signal bar is bullish and you cannot go short below this bar. You can wait for the secondary bar, drop a limit order somewhere here where your initial order would have been, and if you get filled, you can take a setup. I actually do this trade. I don't like it because uptrend played out, there's no reversal, range resistance held, so I'm selling high, downtrend is new low, using double bar entry, quick little scalp working lower. Okay, downtrend played out with the break, push to a new extreme. So right now what I'm going to do is I'm going to mark break in new low. You can tell the overall structure is still very neutral, consolidation. I am in the middle of this big consolidation, so as a price action trader, I truly just have to right now focus on the most recent structure. There is no point trying to focus on the big picture simply because it's not really helpful right now. By the way, today is FOMC announcement day, which means you don't want to be trading something like 30 minutes to 1 hour prior to announcement. And after the announcement is out, you also want to make sure you're not trading for like 10-15 minutes, because there can be massive spike in volatility. There can be slippage. Bars are really big, so you just want to make sure you're very careful trading FOMC announcement days. What's typical is that these days, a lot of times before the announcement, market tends to be slow and choppy. So we have to kind of expect this, that there's not going to be much movement before the announcement. Now downtrend played with the break push to new extreme, and even this small one played with the break push to new extreme. And now we have new high, first entry long, pull back, second entry long. Okay, we have a second entry long, triple test again, one bounce, second bounce, third bounce. And now I'm using once again range rules. You want to buy low, sell high, everything played out. So this is a decent second entry long high probability setup, because you're buying at the bottom, all downtrends played out, and the support held. Quick little scalp. When the range is this tight, what I really like focusing on is buying and selling near the extremes. The more I'm close to the middle, the less I like the trade. And lo and behold, you can see another new high, first entry long, pull back, second entry long. Another downtrend that played out with the break push to new low. I'm buying at the very extreme at the bottom of the trend range, and this time the support is holding even more, second entry long, multiple test. Great high probability setup. I tried to take this trade, but it went too quickly. I was too slow to react. I wasn't filled, but it's a great second entry low multiple test, because at this point the range is so tiny that it's pretty much the only structure that we have to trade now. We have a high low, but I don't really like this high low. It's in the middle of the range. Okay, I expanded the range, but when you're watching this live, you still have it like this. So I don't think you can go long on a high low. You really want to make sure you're buying at the bottom, selling at the top when the range is this tiny. Okay, market reverse down. Can I go long now? I cannot, because I have to follow the short-term trendline rule even inside of this mini range. So I cannot go long just yet. We have a second entry short, but I have short-term option in play, so I cannot go short as well. Okay. Break, push to new extreme. Option played out. Okay. Horrible bullish bar. I cannot really go short here. Okay, nothing much happening. Right now I'm just gonna patiently wait. Okay. Market created push to new extreme. We are below the low of the important key level. And now you're getting very close to the 1 hour prior to FOMC announcement, which is generally where you want to stop trading the hour before the announcement, because there can be super slow structure, just neutral bias, slow consolidation. Everybody is waiting for the news to come out. So the 1 hour prior to announcement, we're not really trading. I'm not a big fan of drawing some big channel. I definitely don't like drawing big channel like this across the entire range, because this is a trailing range. This channel is pretty tempting, but problem is you are at the low of the day key level. It's close to news, so we have to be patient. Also, you push back above EMA here. Okay, and you can tell there is right now massive spike in volatility. This is why you can be trading around the news. Break, push to new high. This is all happening super fast. Market is trending lower, so I'm going to redraw a brand new downtrend. Something like this. Okay, I have overshoot for this downtrend. I was also looking for something like this, but even this channel has some small overshoot. Okay, what you want to do after those news are out is you want to measure how big those bars are, how big the ATR is, and how fast the market is moving. You want to start trading once you can feel the market going back to normal. Sometimes that is harder to do because the market is pretty fast for the rest of the session after the FOMC. So if you are experiencing super fast market and bars are big, just go sim trade it. It's not worth it to be trading live when the stops are this big, because the whole time you're trading normal size bars, you're having normal winners, and now the bars are much bigger, which means the risk increases, and you don't want to give back all your profits just because bars are bigger now. Okay, so if the bars are bigger, maybe really scale down, low number of contracts, or just go on sim to practice, because it's okay to sit this one out when the market is this fast and bars are super big. But sometimes it goes back to normal and you can trade it fairly quickly. You actually have some nice double trap. It's not that bad. You can consider double trap. I think it's better to wait for a lower high. There is no lower high. Market continues to go higher, so this is quite confusing. Why are we trending higher now? Okay, we are going back lower. I'm going to draw the downtrend like this. Price action is quite erratic after news, but I'm going to follow the channels. Okay, break, push to new extreme, downtrend played out, but we have another push down, and now we have second entry short, new low, first entry short, second entry short, uptrend played out with the break, push to new extreme, and this is a great tier 1 bearish signal bar. Now, because this downtrend played the break, push to new low, and you have secondary leg down, you can start anticipating potential wider downtrend like this. If you're eyeing this downtrend, this is the third confirmation, you can actually consider selling a second entry short right here, because uptrend played out, 2 key entry points. This confirmed the channel, 3 swing confirmation, confirming the channel. New low count reset, first entry short. This is not second entry short because of a lowest low right here. First entry short, you broke the low, so you have to reset the count. First entry short again. I cannot sell second entry short below bull bar. Horrible signal bar. No way I can go short right here. Okay, we broke the downtrend, but that doesn't mean I'm expecting reversal. I would expect reversal only if the retracement is too deep, where you retrace the majority of the downtrend. But as of right now, I expect new extreme to be tested, following the trendline rule. New high, first entry long, pull back, second entry long failure. Once there are two attempts to test the new high and there is no new high, you don't have to wait for new high to be in place, because once market tries twice and it fails, that's okay. Two attempts are enough. This is the bigger pattern, and bigger pattern in price action takes precedence. So you can actually take for a second entry long, but on my chart, the bar is too big. Double bar entry, tail to bottom. Just didn't form that clean. It's too big. 10 points almost. Yeah, there is no way to take it. Break new extreme. Downtrend played out. Perfect price action. And now we can pause, looking to go short. And let's see what's going to happen. It looks like we may have straight up reversal, because we have sharp spike above EMA. This definitely looks like reversal. Market keeps trending higher. I still have nice market geometry, so what I'm going to do is I'm going to draw spike and a channel pattern, secondary pattern like this, because it aligns with the EMA. You can't even touch the EMA, so this is telling you that the structure is bullish. Micro double top count reset, so I have to reset the count. New high, first entry long. I'm going to redraw the downtrend working lower. Market is correcting. We're back above. Okay. This important push above EMA is indicating resumption. It's indicating resumption that the new high is about to be tested. Spike channel pattern. So now I'm thinking about new high, first entry long, second entry long. The second entry long would also be new low, first entry short, pull back, second entry short failure. So once we may have a double high probability setup like this in one, we are more confident. And we have a new high, first entry long, second entry long, and a failed second entry short, exactly as we expected. It aligns with the context. Two channels need new high, this one, and this is a great high probability setup. The problem is it was quite big, but educational wise, this is a great trade. Break, push to new high, uptrend played out. So now I'm going to pause, looking to go long, and now it's getting quite late. Market is about to close now. We're just chopping towards the close. So this is the overall structure for today. As you can see, typical FOMC announcement day, slow prior to announcement, and then the fireworks starts. So you want to make sure you're not trading around the news. You're a little bit more patient before the announcement, and after the announcement is out, bars can be bigger, market may be more volatile, so we have to be careful. Maybe go on sim just to get the experience, because it's not worth taking such a massive stop if something goes wrong. But if you can catch a good trade, you can catch a big move. So that's one advantage of market being a little bit more volatile. I'm still a bit under the weather, so I'm going to wrap it up. I'm going to keep it nice and short. I hope you had a good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.